This is Haystack Help Radio on KLZ 560. Haystack Help Radio is powered by HaystackHelp.com. Finding help can be like finding a needle in a haystack. But with HaystackHelp.com, finding the needle just got easier. Now, Haystack Help Radio with Scott Watley on KLZ 560.
And good afternoon, everybody, and welcome to Haystack Help Radio. I, however, am not Scott Watley. I am Dan Muir, and in for Scott Watley. And if you don't know me, I am the co-host of Rush to Reason, and you can catch me and John Rush here on KLZ 560 every day at 3 o'clock. And as we discuss politics, culture, and whatever the heck is on John's mind. And today is Your Money Matters with Kurt Rogers. And this is brought to you by Kurt Rogers and Affordable Interest Mortgage. And you can find Kurt by going to 720-895-0500 or go online, aimortgage.net. And Kurt, today we're going to talk about mortgages.
Yeah, we're going to talk about mortgages. But first thing we have to talk about is we have sunshine.
I love it.
Yeah, we're still going to get rain, but this is August and we have sunshine. It felt like fall yesterday.
Oh, it did. I thought it was September, October yesterday.
But this is why we live in Colorado. It's just beautiful.
I love it. I heard there was actually snow on Pikes Peak the other day.
Saw a picture of it.
So, yeah, that's crazy.
And all the skiers are going, okay, yeah, let's go. We're ready.
Of course, on Rush to Reason, we would say it's all about climate change and Al Gore, but we won't get into that.
No, we're not going to get into
We're not going to get into that here. Okay, so, hey, Kurt, so let's talk about mortgages. Okay, so sometimes, when I'm watching TV or online, I see some mortgage companies advertise these incredibly low rates of 2.875 or 3.5%. Are they real?
Yes.
Really?
I believe they're real, but because of regulations, when you're advertising something in those rates, you can get there, but you have to justify how you got there. And that all comes down to the fine print. So you may seem to think they may advertise or talk about 30-year mortgages and then mention these rates. It's really not on a 30-year mortgage. As you read the fine print, you start to understand that it may be a total 30-year mortgage, but could be a 1-year ARM or a 5-year ARM or a 7-year ARM. Or it could be a 15-year fixed or a 10-year fixed. So as you read the fine print, you start to realize some of these things.
Okay, so it's kind of like one of those deals where for your first month's $1, but then every month after that, it's $250.
Yeah,
kind of like that.
Those loans are pretty much gone. They have to put certain information in there. When they're quoting an interest rate, they have to quote an APR.
Okay.
They have to quote a credit score. They have to quote what your loan to value is.
Okay.
There's certain things they have to quote, but then they have to give you the terms of the loan. If it's an ARM, they can quote even an APR at 2.875, but that's an ARM. Some of these might be balloons. So, yeah, technically I believe they're real once you read the fine print. And there's just certain other things that apply. And then do you qualify? Maybe they're saying you need to only borrow 60% loan to value and have a 780 credit score. Well, while it's going to attract you with the rate, that advertising is designed to generate a phone call, not necessarily to offer you that rate.
Gotcha. So it's to get you in the door or to inquire, get that phone call going. Gotcha.
It happens sometimes.
So what does the APR represent, and why is there a difference?
There's always a difference in the APR because the interest rate is the rate on the base mortgage. But APR stands for annual percentage rate. What it does is it tells you how much the cost to the borrower for 1 year, which includes the interest rate and additional fees that are cost to the loan. It actually is, what am I going to pay to get the loan? What's the interest on this loan? So the interest rate, if it's 2.875, and the APR, let's take a loan, for example. Let's say you have a $350,000 loan at 2.875. Okay. You're assuming that's a 30-year loan. But maybe that's an FHA. Maybe that's with a lot of points. So they're going to tell you 2.875, but the APR is 3.372.
Okay.
So there's a spread there of a half a point.
Yeah, why is that?
Because when you add all the fees, that all becomes part of the cost of the loan. And when the fees become part of the cost of the loan, the APR goes up. In another example, you could get a 3.25% interest rate, and your APR is going to be less than the 2.875. Why? Because there's no fees in the loan. There's no cost in it. Okay. So you're only paying the 3.25%, and the APR on that could be 3.33. So there's a difference between the two because it depends on the fine print. What's the cost? How many points am I paying up front? What's it? Am I doing mortgage insurance?
Okay,
There's so many things that can come into play.
Okay, so you threw out a term there that I hear all the time that I don't always know what you mean. What do you mean by points?
Points they're called discount points. You can buy the loan rate down.
Okay.
Let's say your rate's 4%, but you want a rate of 3.75. The lender can tell you, or we can tell you, what it costs to buy the rate down to 3.25. Now, by doing that, you're not buying the APR down, but you're buying the rate, so you're buying the payment.
Okay.
So let's say it costs $3,000 on a $300,000 loan to buy the rate down a quarter. What I normally advise clients is look at what's the monthly payment savings. If I'm saving $50 a month, divide that savings into how much I had to pay to get there, and that's how many months it's going to take to break even.
Gotcha.
Once that happens, once you're past that month, it might be 79 months. On the 80th month, all of a sudden my rate is better than not paying the points. Discount points are tax deductible because they're interest rates.
Oh, really?
Yeah, when you pay a discount point, it actually becomes a tax deduction because you're reducing your rate, so they allow you to write the taxes off. Credits from the lender are not tax deductible.
Okay, but the discount points are.
Discount points are.
Interesting. That's very interesting.
APR fees include certain things. For example, let me tell you what APR fees do not include.
Okay.
When you're going through it. They don't include the appraisal fee. They don't include the credit report. Now, these are fees that are being charged to the loan, but these are not part of your APR fee. They don't include homeowners insurance or HOA fees. They don't include recording of the deed of the title or title insurance. These are some of the things they do not include, but they do include discount points.
Okay.
They include mortgage insurance. They include broker fees, origination points. They include recording fees. Certain fees, yes, they include. Some are not.
So, but are all these fees mandatory? I mean, do all these fees occur somewhere throughout the process?
Yes. Whether you see them or not, they're there. Now, they can be paid for by lender credits. You have to see them. The new law says you have to see these fees, even if you're not paying for them. For example, closing costs should be no more than about $2,000 on most loans because that will cover the appraisal, that'll cover the credit report, that'll cover the title fees. That's normally $2,000, $2,500. But the lender might give you a $3,000 credit. They're being paid, but they're being paid out of the credit that the lender's giving you because of the interest rate.
Okay, so let me get this straight. Now, I think when I'm out there driving around listening to this stuff, I hear people say, no closing costs, no fees for your mortgage. Am I hearing that? And is this what they're doing, is what you just described?
Yeah, when somebody advertises, in most cases, no closing costs, those closing costs are APR fees. I just listed fees that are not closing costs.
Gotcha.
Because they're not APR fees. So what a consumer believes is a closing cost is anything from their loan amount up.
Right, yeah.
I kind of look at it the same way, but that's not the technical term for it. So when somebody says no closing cost, it doesn't mean you're not paying them. It just basically says you're not seeing them. They're going to be absorbed. It's like when somebody delivers milk to the grocery store, you're not seeing how much that driver is or how much he's paying to rent his truck or how much gas he's putting in his car. It's all part of the cost that they charge you to get the milk. Same thing with the loan.
Well, that makes total sense because I was wondering, well, how can one mortgage company say they're doing this, the other one not? It's just all wrapped in there like that. Okay, so now let me ask you this: while we're talking about different companies, so are there certain areas a person should be looking at when comparing one broker with another?
Well, I firmly believe that. I mean, there's certain questions you should ask when you're either purchasing a home or you're refinancing. This is, in most cases, the biggest investment you're ever going to make.
Yeah.
Now, you're going to hear advertisement, and when you think it's too good to be true, you pick up the phone and you call. You need to have some questions prepared to find out a little bit more, because when you're spending your money, you need to ask questions.
Yes.
When you're asking questions, you're in control. With the loan officer, somebody is just asking you questions, and all you're doing is answering. You're not getting the answers you need. So you need to first find out. What's the different type of loans do you have? How long have you guys been in business? Okay. What kind of loans do you do? do you have any referrals from the Better Business Bureau? You need to find out if they are new or not, or what state are they in. You know, somebody might offer you great rates. All of those rates can be matched by any broker in the state of Colorado.
Okay.
No matter what you think, they can be matched here. The problem that you see sometimes with online, while they may be convenient, all the local brand brokers do online also. But when you're doing somebody that's not in the state, they don't understand Colorado. And by not understanding Colorado, that can create a lot of problems. For example, if you have a property that's got a horse or two on it, the lender from another state might not understand it, and that broker doesn't understand that it's like somebody having motorcycles. You just have horses.
Well, yeah, because, okay, look at Lone Tree, right? We got dense, well, not dense, but you got regular neighborhoods, right?
Yes.
But you've also got the hobby farms and the ranches out there. So if you got somebody from out of state that doesn't understand that about Lone Tree, they're not going to know, well, why do you have it like this? Why is this property set up this way?
Well, if you got 5 acres, I've had lenders tell me from California, say, well, you got 5 acres, it's got to be a farm. No, it doesn't. This is why we live in Colorado, so we don't live on top of each other.
Exactly.
Or if I got 10 acres, well, you're growing something. Well, no, I'm not. It's zoned residential. And they have a hard time understanding that, and the broker doesn't know how to explain it. Plus, they then don't know necessarily how to talk to the appraiser who's going to come out and appraise the property. What am I using the property for? So there's so many things that can come into play if you're not familiar. They might not know that certain values in Weld County versus Adams County and what's going on in that area, what's being built, so they know why the values are going to be higher.
Well, yeah, I mean, great case in point. A friend of mine just bought a place in a subdivision, but it has 2.5 acres. And they're not farming it. They're not raising horses or whatever. It's just how they want to live. They like the space. Totally get that. You may not have that in California, especially like New Jersey or someplace. If you're dealing with somebody on the East Coast, they're not going to understand that.
Yeah, I actually had an underwriter call me up and said, I understand that they got 5 acres, but they got 5 horses. So we believe that they're breeding horses. I said, well, if you look at the comps, everybody in the neighborhood has horses. If you look at the comps, everybody's got 5 acres. And I asked her, I said, do you know any people that live in California that have motorcycles for their kids? She said, yeah. I said, that's how we look at it here. We don't go on the roads with our motorcycles. We go horseback riding.
Exactly.
So there's a difference, and I could explain that to them because I know the area. When they talk to me, I know where you live. I know what's going on, so I can help that loan and answer some questions. Sometimes you don't get that from online companies. It just doesn't happen.
Yeah, but they can't. They can't know everything about the whole country, or especially the area which you're moving into, unless they just happen to be right there.
Yeah. Even though they try and they can get licensed here, it doesn't necessarily mean they understand who's the best lender for the area, who's got the best appraisal, who can help me the best to get my loan done. Because remember what I said, this is a big investment. You're refinancing, and your decisions now can cost you thousands of dollars. And that's what happened back in the mortgage meltdown. Things were moving so fast, most people weren't asking the right questions, and they were getting into the wrong types of loans because they were drawn in by the wrong types of advertisement.
Okay, so Kurt, when we get back, let's talk about why it's really important to pick the right broker, the things you should be looking for. We've talked about local versus online, but let's get into the nitty-gritty of why somebody really should look for you or somebody like you. And let's do that. But you've got this great event. It's called the All About You event. And this is brought to you by Kurt Rogers and Affordable Interest Mortgage. So what you get is either you're eligible to win, I believe, a $300 gift card. Am I stating this
on
right?
any closed loan, you get a $300 gift card.
Oh, so you get, okay.
Anyone.
So on any closed loan, you get a $300 gift card for Home Depot or Charlie's favorite place, Bed Bath & Beyond. So now I would take the Lowe's one, plus a chance to win either $1,000 cash or 3 nights in Breckenridge. And this could be the hardest ski season, right?
It could be in February, February, March.
Oh, fantastic. Or if you're like me, would love a 55-inch, flat screen TV. So call for details. Give Affordable Interest Mortgage a call, 720-895-0500, or apply online at aimortgage.net. I'm Dan Muir in for Scott Watley. We'll be right back.
What could you do with an extra $500, $1,000, or even $1,500 per month? How would that change things for you? Would you buy a new car, pay off bills, or just feel a bit more secure about your retirement? What if I told you there's a way to make your dreams a reality? I'm talking about trading and investing in the market. Now, before you say, oh, that's not for me, just hear me out. I want to invite you to a half-day trading course so you can check this out. I promise you, you'll go away smarter than when you came in. We here at Online Trading Academy sponsor this, and we'll even send you home with a free home study video guide. Your money's doing nothing for you in a CD or mutual fund. Learn how to profit when the market's up or down. Call us now while seats are still available at 303-325-2776. Use offer code radio50. 303-325-2776. That's 303-325-2776.
Take AIM, Affordable Interest Mortgage. Pay off your home in half the time without changing one penny of your spending habits. Need access to your equity for cash out to pay off debt, make that long-needed home improvement, or just take that vacation? Take advantage of AIM's The All About You event, where you'll receive a $300 gift card for any closed loan. Use at Home Depot, Bed Bath & Beyond, or Lowe's. And the opportunity for $1,000 cash, 3 days in Breckenridge, or a new 55-inch flat screen. Call 720-895-0500 for details. If you are tired of paying mortgage insurance, stop. Loans to 95% loan to value with no MI. Looking at buying that new home? Paperless loan approvals with low rates to 97% loan to value and quick closes. Take AIM, 720-895-0500. Find out why more Coloradans every day choose AIM for their mortgage needs, where you come first. Call now to take advantage of the All About You event. $300 now and the opportunity for another $1,000. Call for details. 720-895-0500. Regulated by DOR and MLS 298191. Equal credit lender.
Don't fall for gimmick ads when choosing your insurance coverage. Group Insurance Analyst has been Colorado's insurance superstore since 1984, where customers can compare and shop for all of their insurance needs. At GIA Insurance, their brokers have no allegiance to any particular health, auto, or home insurance company. Take advantage of their experience, expertise, and exceptional client service. For your free quote, call today at 303-423-0162. That's 303-423-0162. Visit their website, e-gia.com, or stop by their office at 44th and Garrison Street in Wheat Ridge. Group Insurance Analyst is an official Haystack Help registered company.
Tired of walking into gun stores and seeing the same guns everywhere you go? Check out our sponsor, Old Steel Historical Firearms. Hi, this is Scott Watley of Sportsman of Colorado. At Old Steel, they specialize in the purchase and sale of historical firearms. Need to get your firearm collection appraised? They can help. Buy, sell, trade, and consignments are welcome at Old Steel. Open 10 to 6, Monday through Saturday. Old Steel Historical Firearms is located at 12 East Girard Avenue in Inglewood. That's just 2 blocks north of Hamden off Broadway. Now you can own a piece of history at Old Steel Historical Firearms. Call 720-662-7252. That's 720-662-7252. Check out their website, oldsteelguns.com.
Well, we did it now. Hi, Dan Johnson from Lynn Lyle Chevrolet, and we received a special allocation of over 600 new Chevrolets, and we're out of room. So to relieve our problem, check these deals out. A 2017 Silverado Crew Cab 4x4 for up to $11,000 off MSRP, or lease a 2017 Chevy Cruze for only $199 a month, sign and drive, or a 2017 Chevrolet Equinox for up to $6,000 off MSRP. Go east and pay the lease. Lynn Lyle Chevrolet, I-225 in East Colfax, or on the web at lynnlylechevy.com. Chevy, find new roads.
A safe space for those who like to think. Rush to Reason, weekdays from 3 to 7 on KLZ 560.
And welcome back to Haystack Help Radio, and this is Your Money Matters, brought to you by Kurt Rogers and Affordable Interest Mortgage. I'm Dan Muir in for Scott Watley. And Kurt, we were talking about, comparing brokers. And, this is probably one of the biggest decisions you're going to make, because buying your house is one of the biggest decisions you're going to make. And so therefore you really, really want to make sure that you've got somebody that's going to work for you, but also somebody that you can relate with and that's going to, work on your concern. These are the things that concern me. Get to know you. You can't do that over a computer. And sometimes you can't do that with a really large firm. You don't know who you're going to deal with. And banks don't have, everything available that somebody like you would have. So what are some of the things that you need to consider when looking for a mortgage or considering a broker?
Well, one of the things that we, at our company, we try to convey to the customer is we're here for you. Now, when you go to look at a car, or you go to the grocery store to buy apples, you're not necessarily designed, I'm only going to buy this car, or I'm only going to buy this apple. Well, when you're looking for a mortgage, while that may be the case, when people call up and they say, okay, what's your rate on this? How does this work? What's your cost? That's what they're doing. But our job is to find out maybe there's another way we can save you more money, because you might not necessarily know that there's other products. For example, people will come up and say, well, if I don't put the 20% down, I got mortgage insurance. How much is the mortgage insurance? Well, that's not necessarily true, folks. I can actually do a loan to 98% loan to value with no mortgage insurance.
That's amazing.
But is that the loan that fits what you're looking for? So I had to ask you questions. And the questions aren't designed because I'm trying to find out necessarily if you qualify, but what's the product that I want to show you that may fit what you want to do better? And a perfect example of that is I had a lady call me just last week. She wanted to buy a property. She couldn't decide whether it was going to be investment or if she was just going to buy another home with her daughter. Well, she didn't necessarily realize how to do that. So in the initial conversation, I said, what are you doing with the house? She said, well, let's talk about investments. I said, how long are you going to keep the house? Is there anybody have you already got it rented? Because she had already found a house. She said, well, I'm thinking about maybe renting it to my daughter. And then after she gets a better paying job, she can in turn buy it from me. So by asking that question, it opened up the next one. Say, okay, what about buying the house with your daughter right now as a non-occupying co-borrower, and the two of you own it, and she makes the payment? It then becomes a refinance, and you have no purchase later on, and you save money. It was a completely different option. But she had never knew about that option. Plus, the interest rate on an investment property is considerably higher than a primary property. So by asking questions and finding out what are you planning on doing, if you want to refinance, what do you want to refinance? Do you want to lower your payment? Do you want to shorten the term? Do you want cash back? And what for? Do you want to eliminate mortgage insurance? Because there's some programs, like I said, I can go to 95% on a refi with no mortgage insurance. But if I don't ask, and if your broker's not asking them questions, you got to think all they care about is giving me just this one and saying goodbye.
Right. This
They're
also
not listening to my needs.
Exactly. This also makes me think of this too, is that we all walk around thinking that we know how to do certain things. So we all walk around thinking that we know how to control our credit score, that we know exactly what we have to do, right? Don't we? Because
Yes,
we all
do.
think, well, we got to pay off all of our debt to have a good credit score. That's what everybody goes around thinking, right? We also think that we know exactly what's out there for mortgages and what the interest rate should be. We all think, well, I can either get a 30 or a 15-year mortgage and the interest rate will be about X. So we all have these preconceived notions. The reality is there's so many programs out there. There's so many ways to help with your credit score. And there's so many different options that we really need to come see somebody like you, the expert. It's kind of like going to the doctor and saying, doc, it hurts right here, so it's got to be this. The doctor goes, no, it's this over here. So it's kind of like you. You go see you. You're the expert. All the different kinds of avenues or products that are out there to help us get the mortgage that fits best for us.
One of the guys you work with, we've been working with him now. He came to me. He wanted to buy a house. His credit score wasn't necessarily where it needed to be. His house wasn't going to be finished for a couple months. So we explained it to him. Had we gone with the original, he would have paid approximately $7,000 to $8,000 more in an interest rate and fees to get the loan because of his score, but we were able to help him move his score up. Now, all of a sudden, he's got a great rate. Everything's come down. He qualifies much easier, and it only took us, in this case, probably 30, 45 days to make that work. So there are ways, and that's what we do. We're not here to guide you to a specific mortgage. We're here to find out, what are you wanting to do? How long do you plan on keeping the house? You get a young couple that comes in, and they want to buy their house, and most young couples think, well, this is my dream house. I'm going to live here forever.
Right, exactly.
82% of them are out of the house in 3 years.
Yep.
Now, I'm not trying to convince anybody to do an ARM, but an ARM sometimes, you could do a 7-year ARM, have a great low rate, And because the rate's lower, in that 7 years, you're going to pay the loan down faster than you would on a 30. So you'll have more equity, and it costs you less to get there, and then you can move on.
And boy, can life change in 7 years.
Yeah, you get a different job. There's
Seriously,
more people in the family. You got dogs. Okay, it doesn't work.
Right.
So you got to get another house. Now, and there are still 18% of the people, on average, that will stay in a house past 3 years.
And Kurt, to be real honest with you, a lot of us out there don't know there's a 7-year arm.
No.
We don't know all the other options that are out there. We don't have a clue. We think we do.
Right.
We think when we go look at the house, well, it's going to be a 30-year. We think we do, but we don't.
I have one lender that does a 5-year arm. It's called a 5-5-5. At 5 years, it's a fixed rate. At the end of that 5 years, the most it can go up is 1 point. But the best part about that loan is they then re-amortize the new balance for another 30. So even though the rate went up, where the payment could have come up, they just stretch the balance another 30, and this is your new payment. And they do that 3 times. It's called a 5-5-5. So you can't get hurt. The rate can't go up more than a point. So if you start at 4, you might go to 5, but all of a sudden your payment might only go up $12, and you got that fixed for another 5 years.
Yeah. Do you ever see those guys with those huge toolboxes?
Tool what?
Huge toolboxes. You go into the automotive shop.
Yeah.
The guy's got a toolbox, as long as his studio, right?
Yes.
You're like that with mortgages. You're like that with all the different options that you have for people that fits their needs. So you've got the one that'll fit exactly what they need.
Yeah, and it's not, again, I'll say it again, it's not my job to tell you this is the loan for you. It's my job to say, here's an option. You think about it, what works. Because whether you do a 1-year arm, a 30-year fixed, or 15, FHA, VA, the asset manager, I get paid the same. All brokers get paid the same. The regulations have changed. So now my goal is to find the best loan for you. Why? Because you'll come back. And you'll send your friends.
And you'll send your friends.
That's
and that
why
is
I do.
huge.
Yeah.
And that's how you build your business. And you know what? That's what you want as a person doing what you do. You want satisfied customers that want to brag about you, come back to you, and send their friends.
That's what we try to do.
And that's what you got. And, that's also why you've got this great event. It's called the All About You event. Now, get this. So a $300 gift card, if you close on a loan, right?
Any loan closes.
Any loan closes. $300 gift card for either Home Depot or, it's not only Charlie's favorite place, but it's John Rush's favorite place, Bed Bath & Beyond. You guys kill me. Or I'd go for Lowe's. And plus a chance at $1,000 cash or 3 nights in Breckenridge or a 55-inch flat screen TV. Call for details, 720-895-0500, or apply online at aimortgage.net. Dan Muir in for Scott Watley, and this is Your Money Matters here on Hazel. Go ahead.
I have to tell you, this 3 nights in Breckenridge,
Yeah.
the place that I have picked out, it's right on peak 7 to peak 8.
Really?
You walk out and it's right there. It's a beautiful place.
Oh, that's gorgeous.
And you get 3 nights. And it doesn't matter if it's February, March, don't care.
Man. Okay. I'm going to. Never, I can't. But anyway, so once again, aimortgage.net or give Kurt a call, 720-895-0500. Dan Muir in for Scott Watley. We'll be right back.
Are you buying your first home? Or are you right-sizing or downsizing for lower maintenance or a lock-and-leave lifestyle? This is Pamela Meyer of Denver Home Navigators with Keller Williams. I can help you discover and reach those goals. This is more than just real estate. It's about your life and your dreams. Call me today for your free consultation at 303-506-0106. At Denver Home Navigators, we help map your course. It's all about you. Call me now at 303-506-0106 or visit my website at denverhomenavigators.com. I'm Pamela Meyer, the exclusive agent for Haystack Help Radio, and I look forward to talking with you soon.
Did you know that each and every day, 21 United States veterans commit suicide? Last year, active duty suicides surpassed the number of combat deaths. When soldiers come home, it is a huge adjustment, and they're often plagued with disabilities, such as immobility, PTSD, or a traumatic brain injury. You can help by donating to Freedom Service Dogs. This nonprofit rescues dogs from local shelters and trains them to become service dogs for these heroes. Help give back to those those who have given so much. Donate now at freedomservicedogs.org.
At Lone Tree Veterinary Medical Center, we believe that all pets deserve to have a good life. And because we know that your pet will have many different needs throughout its life, we offer complete pet care services every day, all at one location. Whether your furry friend needs a checkup, advanced medical care, surgery, boarding, grooming, obedience training, food, care products, or toys, we are here for your pet 7 days a week. At Lone Tree Veterinary Medical Center, we know that you want the very best for your pet, which is why you can count on us to provide top-notch care in everything we do. We are certified with the highest rankings by the American Animal Hospital Association and hold a gold star rating with the Better Business Bureau. You and your pet can visit us Monday through Friday from 7 a.m. to 8 p.m., Saturday from 8 a.m. to 5 p.m., and Sunday from 10 a.m. to 5 p.m. We are located at 8681 East Lincoln Avenue in Lone Tree. Learn more about us by visiting our website at lonetreevet.com or just give us a call at 303-708-8050.
This is Scott Watley from my friends at Rampart Firearms in Sedalia. This is a great store, family owned and operated. They buy, sell, trade, and consign firearms. You will find a great selection of new and pre-owned handguns, shotguns, and rifles. If you can't find the gun you want, Rampart Firearms will special order your gun at no extra cost. Found a gun on the internet? Rampart Firearms will do one firearm transfer and the background check for only $10 if you mention Sportsman of Colorado. Rampart Firearms, 720-468-0050. That's 720-468-0050. Located at Highway 67 in Santa Fe in Sedalia. Rampart Firearms open 7 days a week. 720-468-0050.
Denver's Afternoon Rush. Rush to Reason is coming up at 3. Now, back to Haystack Help Radio.
And welcome back to Haystack Help Radio. I'm Dan Muir in for Scott Watley, and you can catch me along with John Rush today at 3 o'clock on Rush to Reason. And right now it's Haystack Help Radio. Your Money Matters, brought to you by Kurt Rogers and Affordable Interest Mortgage. And you can always find Kurt at 720-895-0500 or go to aimortgage.net. And okay, so Kurt, for years now, you've been talking about this loan called the Asset Manager. As a matter of fact, I referred a friend of mine over to you, and I'm going to bug him because he needs to look into this. But all of us, what is the Asset Manager? How does it work, and who's it really designed for?
And I'll kind of get into that. I'm going to walk through the Asset Manager because I've had the loan now for 10 years. I've got hundreds of people that have it, and they will not get out from underneath it. But I need to try to explain how it works. It is a 30-year mortgage. But the way it's designed, the loan's been around since 1965. And the company that invented it, that created it, actually did it out of Australia. It's called Macquarie. But the rest of the world doesn't do 30-year fixes.
That just blows my mind. Every time you say that, I go, really?
And when you look at a 30-year fix, it's a great loan. I'm not here to say it's a bad loan, but there are other options. A 30-year fix, one of the things is, that's compound interest. What that means is if you have a $300,000 loan and you make your first payment of, let's say, $1,800, maybe $300 of that goes to your principal. So your balance now is $299,700. They re-amortize that for 29 years and 11 months and charge interest rate again. So it's compound interest. It adds every month.
Gotcha.
That's why when you're looking at your mortgage in the first 5 years, you're not paying off your loan a whole lot, because the majority of it's going to interest.
Yeah, it doesn't go down at all. You're like, come on.
This loan is simple interest. So it works on the average daily balance of your loan to calculate your payment, so you pay less. The other thing is that is advantageous on this loan, they can do a loan for $100,000 to $2.5 million at the same rate. They don't change because the loan amount's higher, because it benefits everybody. It has no jumbo fees. So if you go above $400,000 or $493,000, there's still jumbo fees. If you want to take cash out, they don't charge you fees for that. There's no if your credit score is a 700 or a 780, it's the same. They don't have hits to the cost of the loan because of credit score. They look at this loan as the loan should fit everybody, whether it's $100,000 or $2.5 million. What makes it different is you have a checking account that's attached to the mortgage. Now, what that means is, let's talk about this $300,000 loan.
Okay.
Let's say you deposit $5,000 into your checking account. In a normal mortgage, that money sits there and it kind of like a clearinghouse, and you send it out to pay off all your bills. And one of those bills is you make a payment to your mortgage. And they keep 97%, take the other 3%, pay the principal. In this loan, every dollar you put in your checking account goes right to the mortgage.
So do I have access to my money?
Yes.
Oh.
Now, so let's say you put in the $5,000. It basically works like a savings account. They're going to pay you the same rate as you're paying on the mortgage. Let's say you're paying 4% or 5%.
Okay.
And you put in $5,000. The day one you put it in, they start basically paying you 5% on that $5,000 for every day it sits there. They take that and apply it to the principal. And they drive the principal down.
Okay.
So as the principal goes down, so does your interest rate being charged, your APR. So does the cost of the loan, and you shorten the term. So your payment is calculated on your average daily balance.
Interesting.
So because your average daily balance is lower, your payment's going to go down, let's say $6 the first month. You're still going to pay your bills. You're going to write your checks. They're going to drive your payoff back up, but the average daily balance was lower. So you save $6 the first day. And then maybe the first month. Then the next month you might save $9. Then month 12 you might be saving $42. Then month 36 you might be saving $212. Because your average daily balance is going down, your payments are going down, but you're still depositing the same $5,000.
Right.
Paying your bills, leaving the rest in your account. If you were getting 5% on your checking account, wouldn't you leave the money in the account?
Absolutely.
That's basically how this thing works. So because of that, you're able to pay off your mortgage. Our average consumer is paying off their home in 14 years and 3 months on a $300,000 loan without changing one penny of their spending habits. Pay all the bills like they do, put the money in the checking account, just leave it alone. Because it pays you for lazy money.
What a great tool. This is a fantastic tool. So what are the types of people, or who can qualify for a loan like this?
The most they'll go is 80% loan to value, and you must have a credit score of 700.
Okay. And that's it?
You can't have a 50% debt ratio, but you can't be overextended. But that's pretty standard across the industry. There was a company many years ago called UFirst that came out, and allowed you to buy a software program to make this work, and it cost $3,500. There's nothing you have to pay for this. It's a mortgage, 30-year mortgage, with a checking account that allows all this to happen, and it does it seamlessly.
So now, is this like a checking account through this mortgage company, or is it through your bank?
No, it's through a bank.
Oh, really? So, really?
Bank that's across the nation.
Okay.
Just put your money in. They give you online banking for free.
Okay.
They charge you $60 a year to give you as many checks as you want and to do all your online banking. You get to monitor the account 24/7. They monitor the account 24/7. And as an example of that, about 6 years ago, we received a phone call from the bank and asked my wife and I if we were in Florida. We said no. They said, "Well, somebody just hit your account for $5,000. I said, "That ain't us." They shut the card down, gave us a new card because it comes with an ATM card and a credit card.
Okay.
Gave us a brand new one. We weren't responsible for it because they pay attention to it 24/7.
Wow, that's incredible. Okay, so now I for years I ran a business, and it was always difficult to get a mortgage and to prove income and all that kind of stuff. How does this loan work with somebody that might be a business owner?
Well, it actually works very well. I have several people that do that, especially if you have investment properties. I have people that were paying their home off using this, and then one of the advantages to this loan, let's say you have that $300,000 start.
Okay.
And let's say, I'm not saying this to make it sound funny, but you can actually pay down $50,000, $60,000 in 2 or 3 years. It's pretty simple to do when you start to see how this works. So in 3 years, let's say you have $60,000. You decide to go out and buy an investment property. You pull the $60,000 out. Buy the investment property as your down payment. Now you got cash flow coming in. Guess what? You got more cash going into the account. You're going to pay it back down faster, but now you got this tax break and you got this cash flow coming in. And it's turned around and done nothing but help you on the other side. I have many clients that buy fix and flips. I actually have 3 ladies from Texas that they own, all 3 of them own their home in 4 years.
Seriously?
System buying fix and flips.
That's amazing.
They were able to use that. They all had about $50,000 at the beginning in the equity. They used it, bought their first one, and then they just kept doing it. And within 4 years, all three of them own their homes using it for investments. So it gives you the option to go back to that $300,000 should you need the money. I have a neighbor who became unemployed. Back in 2008, when the market crashed, she lost her job. She was unemployed for 18 months. But because she had built the equity, because she paid this home down so much faster, she never had a late payment because you don't have to put money in to take money out. If you don't deposit any money, you can live on the equity till you get your job back, which is what she did for 18 months.
You're not going to do that on a 30-year fixed.
You can't do it on any other loan.
Yeah.
She never lost her job. Her credit score never went down. And once a month, she'd bring me cookies.
Oh, kind of like
well,
that.
I thought that was a pretty good.
Well, that's a great perk.
Since 1999, everybody who's had this loan in the United States, only one person went to foreclosure. 13 million people went to foreclosure in 2008. This allows you to handle speed bumps of life when they come up. You know, those medical expenses or the water heater broke. You can either put that on a credit card, you can take it out of savings, or you can just pay yourself and take it out of
Okay, Kurt, what's the catch? Do you got to be a Rockefeller to qualify for this loan? I mean, what's the real catch here?
700 credit score, 80% loan to value.
Well, you make it just sound like anybody with a 700 credit score and a what'd you say, 80% loan to value?
80% loan to value. They will do it.
They do now, can you refinance?
To 2.5 million.
Can you refinance into a loan like this?
I have probably about 60% of my people, once they hear about it, they'll refinance into this and start paying off their home. Because think about it. If the economy goes south again, and you have the ability to survive the next speed bump that's coming, because we all know it's coming, and it doesn't cost you any more. You don't have to change your lifestyle. There is one downside to it, and several people have picked up on this. John Rush, when we talked, he mentioned this. What's the downside? And this was it. If you're not financially disciplined, if when you see you have an extra $10,000 in the bank, you go buy new furniture, or you see you got 20 grand, you go buy a new Harley. This is not your loan. Now, if you had planned to go buy new furniture, that's different. But if you weren't planning on it, just because the money's there, you go spend it. This is not your loan. It's not going to work for you. This is designed to help you become debt-free, but have the ability to handle whatever is thrown at you. Probably 30% of my customers own their home in less than 6 years. You had mentioned something about business. I had this one guy that owns a cleaning company, and at the second day of the month, he moves $50,000 out of his business, puts it into this account. On the 28th of the month, he moves it back. Remember, it works on average daily balance.
Right.
He pays off his $400,000 loan in 6 years and 4 months. Because he's getting paid 4 to 5% on $50,000 for 26 days every month.
Right.
It's free money. It's sitting over here doing nothing.
Right.
Over here, it's working for
So you're putting it to work for you.
Yes.
So that's why they call it the asset manager, because it's managing your assets.
Yep.
Or it's allowing you to actually manage your assets, where a standard mortgage really doesn't allow you to do that in this fashion at all.
And some people will ask me, well, why would a bank do this? Banks are in the business of making money. Okay. Banks look at everything as a risk factor.
Right.
The first risk factor, if you're doing a 30-year mortgage and you're 5 days late or 8 days late, do they not have somebody that's going to pick up the phone and call you?
Oh, yeah.
Are they going to send you a letter?
Yep.
On the 15th, they're going to charge you more, but they're going to be in your face, right?
That's right.
Okay. That costs money.
Yes, it does.
Now, if you have a house that's worth $200,000 and you owe $150,000, the risk is with the bank, because the average cost for a foreclosure today is in excess of $70,000.
Oh my!
But if you owe $100,000 on that $200,000 house, the risk is with you.
Yes.
What the banks have learned with this, because they have no late payments, they get their payment. They've had only one foreclosure, so they have no expense. So their risk factor's down. You're paying the home off twice as fast, so that risk factor's down. But the biggest one is that most people don't understand. If you give a bank $10,000, how much money is that? How much of that can they loan out?
I have no idea.
8 times.
Really?
So they're going to take $10,000, loan out $80,000, and they're going to make 21% on that $80,000, and they're only paying you what on a 30-year?
Well, now they're paying you.
They're paying you what?
Fine.
Nothing.
Nothing. Yeah, nothing. Yeah, right.
In this loan, they're paying you the money back because they're making their money on the loaning out. Because what they're showing you is they're not actually taking your money; it's on paper. They're making their money, so they're not worried. They have no risk. They're not worried about the house coming back on them. They don't. You're building the equity twice as fast, never missing a payment. They just love that part of it.
And this is not some new scheme, because it's been around since 1965.
1965.
So why isn't this more commonly used?
Because banks start looking at, if you look at a $300,000 loan at 4%, you're going to pay back close to $247,000 in interest. And you're going to get the majority of that in the first 5 years. Most banks don't want to take that chance. We, like I said, no other country in the world does 30-year fixes. We do.
And banks,
compound interest. That's why they think it works better.
Yeah, banks love that.
They love that.
Absolutely. Okay, you're listening to Your Money Matters with Kurt Rogers and Affordable Interest Mortgage. Now, it's all about you, the All About You event. So if you close a loan with Kurt, you can get a $300 gift card from either Home Depot, Bed Bath & Beyond, or Lowe's, plus a chance to win $1,000 cash or 3 nights in Breckenridge or a 55-inch flat-screen TV. Call for details, 720-895-0500, or apply online by going to aimortgage.net. Dan Mueller in for Scott Watley. We'll be right back.
You were injured in an accident. At first, you didn't worry about it too much. I mean, accidents happen, right? But then the pain started to keep you up all night, and the doctor bills started to pile up. And to top it all off, the person responsible is just avoiding you altogether. So now you're stuck with a bunch of bills that you can't afford. No need to worry. Call me, Kevin Plesh, and get a professional opinion about what you can do. I'll answer all of your questions relating to the accident, and I'll help you to determine if you're entitled to compensation for pain and suffering. I have the experience and the knowledge to navigate the complex maze created by the insurance companies, designed to minimize your claim. If you've been injured in an accident, call me, 303-806-8886, for a free consultation to find out how we can help you get the compensation you deserve.
Take AIM, Affordable Interest Mortgage. Pay off your home in half the time without changing one penny of your spending habits. Need access to your equity for cash out to pay off debt? Make that long-needed home improvement? Or just take that vacation? Take advantage of AIM's The All About You event, where you'll receive a $300 gift card for any closed loan. Use at Home Depot, Bed Bath & Beyond, or Lowe's. And the opportunity for $1,000 cash, 3 days in Breckenridge, or a new 55-inch flat screen. Call 720-895-0500 for details. If you are tired of paying mortgage insurance, stop. Loans to 95% loan to value with no MI. Looking at buying that new home? Paperless loan approvals with low rates to 97% loan to value and quick closes. Take AIM, 720-895-0500. Find out why more Coloradans every day choose AIM for their mortgage needs, where you come first. Call now to take advantage of the All About You event. $300 now and the opportunity for another $1,000. Call for details. 720-895-0500. Regulated by DOR, NMLS 298191, Equal Credit Lender.
Hi, this is Scott Watley. Let me tell you what I love about Stack Optical. They are truly one of the last optician-owned, family-owned optical stores. At Stack Optical, you can be confident you'll receive personal attention. For over 50 years, Alan Stack has shown he really cares about making his customers happy. Stack Optical also has a beautiful new location at 2233 South Monaco Parkway in Denver. Free and easy up-close parking. Stack Optical has an on-site eyeglass production lab. Whether you need office eyewear or a new set of shooting or golf glasses, Stack Optical has the solution with the Stack Sport Pack. Give them a call today and ask for their $69 eye exam, 303-321-1578. That's 303-321-1578. Your eyes and vision are one of the most important things in life. I'm confident at Stack Optical, you'll see the difference. That's 303-321-1578, stackoptical.com.
If you're looking for great deals on outdoor equipment and clothing, we've got you covered. Hi, this is Bill Paddock, owner of the Outdoorsman's Attic, your outdoor gear consignment headquarters. You'll save 20, 30, 40, even 50% on previously owned outdoor gear for the fisherman, hunter, and camper. We also sell live bait, firearms, and ammo. If you're doing a little spring cleaning, bring in your gear to the Outdoorsman's Attic. We'll sell it for you and put cash in your pocket. You can also pick up your hunting and fishing licenses right here at the store. Your one-stop shop for all your outdoor gear needs is the Outdoorsman's Attic, located at 2650 West Hampton Avenue in Sheridan, Colorado. 303-781-3626. That's 303-781-3626. Or visit us online at outdoorsmansattic.com. Mention Sportsman's of Colorado and receive 20% off all your outdoor clothing.
Hi, Dan Johnson, General Manager at Len Lyle Chevrolet. You know, I hear it all the time. If you give me a good enough deal, I'll buy your vehicle. So here it is. A 2017 Crew Cab 4x4 loaded for up to $11,000 off MSRP. Or how about a 2017 Chevy Cruze, sign and drive lease for only $199 a month? Heck, that's cheaper than a used car. And we'll pay top dollar for your trade-in. So go east and pay the lease. Len Lyle Chevrolet, I-225 in East Colfax, or on the web at lenlylechevy.com. Chevy, find new roads.
A safe space for those who like to think. Rush to Reason is coming up at 3.
And welcome back to Haystack Help Radio. Dan Muir in for Scott Watley, and please join John Rush and me today at 3 for Rush to Reason. And right now it's Your Money Matters with Kurt Rogers, brought to you by Affordable Interest Mortgage. You can get a hold of Kurt at 720-895-0500. Okay, Kurt, so I listen to Haystack a lot. And every time you have a realtor on, they're always talking about, about getting pre-approved prior to looking for a house. Well, why is that? Why do I have to be pre-approved? Excuse me.
Well, a lot of people think that pre-approval is just going down and answering a couple questions and my credit score says yes. There's a thing called pre-qual and pre-approved. Pre-qual means, from a general aspect, yes, you would qualify. Pre-approval, by the new legal standards that they've come out with from HUD, is you have to have somebody look at that loan and look at your income and look at your assets and say, yes, you qualify. They can't go by what you say. They have to go by what you prove.
Oh, okay. So they actually do a check on you and
Yes.
you are approved.
Approved for the loan. The only thing waiting is the appraisal.
Okay,
And a
which
clean
is
title- and a
actually
clean
on the
title.
house. I mean,
That's right.
There's nothing you can do about that ahead of time.
Right.
So you're getting all your bases covered ahead of time, so that when you look at a property, they know, except for, like you said, the appraisal or whatever, that you could buy this house.
Yeah, the seller is saying, if my house appraises and if my title's clean, this person's buying my house. There's no way out. So in a very competitive market like we have right now, you can't get to the front door if you don't have a pre-approval. Most realtors just don't want to talk to you because they know that your offer is never going to be looked at.
So do a lot of people get confused with pre-qualified and pre-approval?
Yeah.
I bet they do.
Truthfully do. They don't want to commit, but they want the approval. Well, you can do that. We actually go paperless. You can go online to our website at aimortgage.net, click on the little Apply Now button, and you can go paperless. And within 24 hours, I can have you pre-approved because you're going to give me certain information, and we're going to do it paperless. And I can have you pre-approved for a dollar amount.
Okay.
So
and
you're
then-
good. So then you can go out and say, okay, I can buy this home.
So it's almost like having the checkbook in your hip pocket.
Right.
Because I'm pre-approved.
And you need that when you're going to go out. Besides just the pre-approval, you got to have an agent that knows what they're doing so they know how to negotiate. Because there's several offers. A lot of times there's bidding wars going on. Why is somebody going to take your offer over somebody else's? What do you have to offer them? And if you don't have the pre-approval, you don't even get the door open.
Okay, so like if you're the guy that goes in pre-qualified versus the guy that's pre-approved, they're going to go with the guy that's pre-approved every time.
Yeah, if you go in and you do our paperless pre-approval and then you go find a house, I can normally close that loan in probably 17, 18 days because the only thing I'm really waiting on is the appraisal. Well, the seller knows that. The seller knows that it's going to be a quick close because then they can make their plans to do what they want to do. And the realtors, because they want to move things along pretty quickly, the selling agent always calls me when one of my clients makes an offer and say, okay, do you have a pre-approval? What have you done? And they interrogate me.
Because they want to make sure it's going to stand.
That's their job. Their job is to take care of their client.
Exactly.
They want to make sure that they're doing the best for their client. So the pre-approval is simple and easy. Like I said, you can go online and get it done. It takes 24 to 36 hours, and you're good to go.
And you're ready to roll. So when you find that property you want, it's almost like you're a cash buyer. You got, hey, I am pre-approved. Yep. I'm right here. We don't have to monkey around.
Like I got a
with that
check.
anymore. Yeah, I love that. Okay, so Kurt, listening to you, there's been some changes in the industry recently and that have affected people. What are those changes?
Yeah, and they just basically came out August 1st. The first thing is, because of home values have come up, Fannie Mae has increased their what we call debt-to-income ratio. It used to be in the low 40s. They've now moved it over 5% higher. Now, what that does is it takes those folks that were looking at maybe a $350,000 house and maybe allow them to go higher, or somebody that was turned down before on a $350,000 house because their debt-to-income ratio was too low can now get approved. So it's allowed us, because with rates moving, it allows you to be able to buy that home and the debt ratio works better. And they always look at the debt ratio. How much money you make versus how much is going out on your mortgage payment and all your debts. So they've increased that by 5%. Freddie Mac, which are the other main lender, they've had it up there for a while.
Which that actually gives you a lot more flexibility, doesn't it?
Gives you a lot more flexibility, again, so you get the pre-approval and get everything done. The second thing they've done, which is really important, is they have removed judgments and tax liens from 90% of the people's bureaus.
And why is that?
Because what they were finding out is that the mass majority of them were being falsely inputted into the credit bureaus. So what they make the credit bureau companies do is get 4 pieces of information, 3 of the 4 pieces of information. You must have the client's name, you must have the client's social, and you must have the client's correct address and date of birth. If you don't have those 3 of those 4, you can't put it on the credit bureau. Now, one of the things that does is improve your credit scores.
Sure.
Okay?
Yeah.
Second thing is it does, which when you improve your score, as you and I both know, you pay less money, like the guy we talked about, say $7,000, but you're able to now buy a property where you couldn't before.
Right, exactly. Okay, so that's a great change. Now, also, we were talking about the paperless application or the paperless approval, but you've also got things to help with closing.
Yeah, our whole system is, one of our lenders is, once you start the loan, you can actually monitor your loan progress as it goes along. These folks are closing loans in about, like I said, 17 to 18 days. The only thing that slows us down is the appraisals. And that's even changing because most of the lenders have now gone to a new system to where on about 40% of the loans that we're doing, even on purchases, we don't need an appraisal. They already know what the values are, the properties are, and they say, yeah, we're fine. If you're at 80% or less, they're going to say more than likely you don't need appraisal. Well, guess what? That saves your appraisal fees.
Oh, it saves
also
appraisal
saves
fees.
your time.
A lot of time.
A lot of that's starting to change.
That's really
So it's
interesting.
to expedite the system, and we can do all of this online, paperless.
Oh, that's really, really good. So not only are you able to get people pre-approved, but now you can get them through the closing process faster. And if certain criteria met, you can skip the appraisal altogether and just get right on in.
The last thing I'll tell you, within 6 months, you're going to see that a customer can purchase a home and close in their living room of the house, the place they're living, or they can do it at work. They do not have to go to a title company to close. They're going to go to paperless closes. You can sit on an iPad and close your loan and e-sign the documents. That's coming in 6 months.
Well, that's kind of bringing the whole mortgage industry into the 21st century, is it not?
Yeah, most definitely. And if you're not paying attention to it, the millennials are driving this force. They want to shop. They want to save time. They look at things, they compare, they're intelligent, bam, they're done.
Okay, so one last time, it's the All About You event, $300 gift card for Home Depot, Bed Bath & Beyond, or Lowe's if you close a loan with Kurt. Also, then you'll get a chance to win $1,000 cash, 3 nights in Breckenridge, or a 55-inch flat-screen TV. Call for details, 720-895-0500. Kurt, do your thing.
Affordable interest mortgage, 7400 East Arapahoe Road, Suite 109, Centennial, Colorado, NMLS 298191. Regulated by the Division of Real Estate, and we are an equal credit lender. You can contact us at 720-895-0500 or go to our website at aimortgage.net.
Kurt, this has been a blast as always. Thank you so much. And thank you, everybody, for listening to Haystack Help Radio. Join me and John Rush today at 3 o'clock. Have a great afternoon.
The views and opinions expressed on KLZ 560 are those of the speaker and do not necessarily reflect those of Crawford Broadcasting, the station, management, employees, associates, or advertisers. KLZ 560 is a Crawford Broadcasting God and Country station.